Something historic just happened, and Washington can't stop it. In a bold defiance of global financial norms, China has officially abandoned the US dollar in a series of massive trade agreements, triggering a seismic shift in how global commerce is conducted. Oil, gas, rare earths, and even tech deals are now being settled in yuan, rubles, and gold, not dollars. The result? Over $2 trillion, 0 cents in global transactions, are now moving outside the dollar system, and for the U.S., that means losing control over interest rates, sanctions, and economic leverage. This isn't just about currency, it's about power. And China has just pulled the pin on a financial grenade. The fallout? It's already begun, and it's unstoppable. For nearly 8 decades, the US dollar has been the lifeblood of global trade. After World War II, the Bretton Woods system cemented the dollar as the world's reserve currency. Oil, gold, wheat, virtually every major commodity was priced and traded in dollars. This gave the US unmatched financial power. It could print the currency everyone else needed and use that dominance to enforce sanctions, control capital flows, and influence global policy. But beneath the surface, cracks were forming. Countries like China, Russia, and even U.S. allies began to question the risks of depending on a system Washington controlled. The 2008 financial crisis shook global faith in the U.S. banking system, and as America began using the dollar as a weapon, freezing reserves, banning nations from SWIFT, sanctioning adversaries, resistance quietly began to grow. China, in particular, viewed this as a threat to its national sovereignty. Over the past decade, it has been methodically building alternatives, launching its own digital yuan, expanding the cross-border interbank payment system, SIEBS, signing bilateral trade agreements with dozens of countries in local currencies, increasing gold reserves, and dumping U.S. treasuries. While much of the world remained dollar-dependent, China quietly laid the foundation for something new, a parallel financial world. And as U.S.-China tensions intensified in tech, trade, and geopolitics, Beijing accelerated its timeline. Now, in 2025, that alternative system has become operational, and China is no longer just preparing to move away from the dollar. It already has. This isn't just a shift in payment preference. It's a challenge to the very architecture of global finance, and the U.S. is no longer in control. The moment the world had been anticipating quietly arrived, and the dollar didn't even see it coming. On July 22, 2025, China signed a landmark energy and trade pact with 5 BRICS nations and several non-aligned economies, including Saudi Arabia, Iran, Brazil, and Indonesia. The catch? All transactions would be settled without a single US dollar. Instead, payments would be made in yuan, rupees, rubles, and even gold-backed digital currencies. China's central bank confirmed the deal included over $580 billion, 0 cents, in annual trade, from crude oil and rare earths to microchips and grain, all flowing through alternative payment systems like CIPS, bypassing the traditional SWIFT network. But that was just the start. Russia and China jointly announced the launch of a BRICS commodity exchange where prices for oil, gas, lithium, and metals will be benchmarked in non-dollar units. This threatens to erode the dollar's role not just as a payment tool, but as the standard for global pricing itself. At the same time, China ordered its state-owned enterprises to reduce dollar holdings and begin transacting with strategic partners in local currencies, or digital yuan. Major Chinese ports and banks began rejecting new contracts denominated in USD, effectively freezing the dollar out of key parts of global trade. Perhaps the biggest blow came when Saudi Arabia agreed to sell oil to China in Yuan, ending nearly 50 years of petrodollar dominance. The symbolic shift sent shockwaves through financial markets and triggered an avalanche of dollar dumping across Asia and the Middle East. This wasn't a warning shot. It was a calculated strike, a deliberate step toward dismantling dollar supremacy. Now that the rules have been broken, there's no going back. The global reaction was swift and chaotic. Within 48 hours of China's announcement, U.S. bond markets trembled. The yield on 10-year treasuries spiked as foreign buyers rushed to offload over $180 billion U.S. cents in U.S. debt, fearing the dollar's role as the global reserve currency was unraveling. The U.S. dollar index dropped 3%, its sharpest single-week decline since 2008. Wall Street was rattled. Bank stocks tumbled, led by J.P. Morgan and Citigroup, both heavily exposed to international markets. Commodity markets scrambled to reprice contracts now being settled in non-dollar terms. Oil futures, denominated in yuan, debuted in Shanghai and surged in volume, pulling liquidity away from New York and London. In Washington, the mood turned grim. Treasury officials issued emergency statements insisting the dollar's role was secure, but behind closed doors, panic set in. A leaked Fed memo warned of a potential capital flight scenario, as central banks across Asia and Africa began converting dollar reserves into gold, yuan, and euro. Meanwhile, developing nations, once pressured into dollar dependency, saw a green light to exit the system. Argentina, Pakistan, and Nigeria announced plans to conduct more trade in local currencies. Even U.S. allies like Turkey and Egypt opened talks with China's CIPS network. The financial architecture the U.S. built and weaponized is now being bypassed on a massive scale. And every dollar excluded from trade is a hit to America's global influence. The fallout is no longer theoretical. It's financial, political, and strategic, and it's accelerating. To understand this shift, you have to understand what the dollar represents. Not just currency, but control. For decades, the U.S. has used the dollar's dominance to steer global politics. Nations that defied Washington risked being cut off from SWIFT, having their reserves frozen, or facing devastating sanctions. To China and other emerging powers, this wasn't financial policy, it was coercion. Beijing watched as Iran, Venezuela, and Russia were isolated from global markets. When the U.S. froze $300 billion, 0 cents, of Russia's reserves in 2022, it sent a message louder than any speech. Your money is never really yours if it's held in dollars. China took that lesson seriously. This dollar rejection is a preemptive strike, a move to insulate itself from future U.S. pressure. By building parallel systems like SIPs, promoting the digital yuan, and establishing commodity markets outside dollar influence, China is carving out a financial world where Washington's tools don't work. And it's not alone. BRICS, ASEAN, and parts of the global south are following suit. Not out of ideology, but self-preservation. They've seen what happens when the U.S. uses the dollar as a weapon. Now they're choosing financial independence over convenience. And the global balance of power is shifting as a result. What we're witnessing isn't just a reaction to U.S. policy. It's the beginning of a new financial era. The dollar, once untouchable, is now being challenged not by force, but by alternatives. And for the first time in modern history, those alternatives are working. China's break from the dollar isn't just about trade. It's about rewriting the rules of global finance. By creating a parallel system, Beijing is signaling to the world, you no longer need the dollar to survive, and you no longer have to play by Washington's rules. This has massive implications. If enough countries stop using the dollar for trade, global demand for dollars drops. That could mean higher inflation at home, rising interest rates, and a weaker ability for the U.S. to fund its own debt. More critically, it undermines the power of U.S. sanctions, which rely on dollar dominance to be effective. The world isn't going to ditch the dollar overnight, but the process has clearly begun. And once trust is broken, it rarely returns. This isn't just about China's rise. It's about the erosion of American financial supremacy and the birth of a truly multipolar economy. The global financial system is shifting, and fast. As more nations move away from the dollar, the world is inching closer to a multipolar currency era. China is leading the charge, but it won't be alone for long. BRICS, expansion, digital currencies, and gold-backed trade are gaining momentum. For the U.S., this raises urgent questions. Can it defend the dollar's dominance? Will it retaliate economically? Or is it already too late to reverse the trend? Washington may attempt to strike back with sanctions, capital controls, or trade threats. But the more it weaponizes the dollar, the more the world looks for ways to escape it. The truth is, the dollar rulebook has been broken, and the fallout is just beginning. What comes next may redefine global trade, power, and influence for a generation. The era of unchallenged U.S. financial control is ending, and nothing Washington does may be able to stop it.